Welcome to TradeTheMBI.com. This is John. This report is for the 15th of March. So the Ides of March, poor Julius Caesar. Anyway, that doesn't really impact where we're at in the market here. We had our little boost here. We've returned back to the ABM yellow. So all we've done is return to the mean. Sometimes it gets a little carried away, gets outside the range. And I mean, even when we see it sparking up on like moves over here back in the beginning of the year, comes right back to the ABM and then continues along. So that's par for the course. Still in a weakness though, hasn't changed. You can see here we ended up with steel actually moving below cyan again, giving even greater strength to shorts as we reach this key level. So will we play with some of the other lines in between here? Very possible. We're still looking at very weak midterm buyers, even though long term seems to be holding out just fine. The issue with that is that the money came in at the beginning of the month and then it dries up. And so inevitably you have the weight of things. Now, interesting. So we're looking at a return back to the ABM off of what was the breakout. Now, this is still well below the previous highs. And you can see when we turn to the NASDAQ, the big difference. Here was the previous high. I don't want to grab the number. I just want to show the previous high. Doing the same thing, but still holding up better numerically than the S&P as a broader index. Same situation though. The cyan had already closed below the steel. Had closed below the cyan a while back, and you'd already been in that crossover. So a little bit weaker from the NASDAQ earlier, but still. The shakeout was right around positive and still is kind of at the 0 point. So you're not looking at this kind of a breakdown, so to speak. I think it's just an absorption, and we're sort of in a period where you just had these dramatic revisions that somehow economic growth has just stopped overnight. Of course, it's all related to Cohen disappearing, and boy, wasn't the market disappointed that they realized that Trump used someone to get his tax cuts through and then just threw them away, that they don't have an open pipeline. I'm sure that was quite a shock, as they expected to probably have great influence that just basically got thrown away. So that's an interesting inside politics thing, but it has an impact because, again, as I've pointed out, there are very specific groups that control broader market moves, and their impact is important. Speaking of which, so is the euro being outside of that agreed upon range, and is it ridiculous? Yeah, you can make all sorts of arguments as to why something shouldn't be what it is. I've never been a fan of that, because what we can see is where money is, where it's going, and what we can expect from it. And that's all you can go by. Now, you got steel crossing below cyan there. That should present a little bit more weakness. Does it mean it's going to break out of the range that it's been? No, because you're still looking at pretty healthy, above negative 7.5 for red, as well as, even though the green is fading down here, it means we're in a little bit of a soft move, but it's pretty healthy overall as far as a euro standpoint, which doesn't make a whole lot of sense when you consider what's going on in the euro community, but that's okay. So, flight to safety. People got to run to the bonds, and if there is no growth, then hey, treasuries where they were attractive. So is it a bit of fake news? We're going to find out, because you can say that growth is all of a sudden stopped, but the number's going to come out and everybody's going to know what it was. Now, some of it can be weather related in wintertime, and that it is winter. People forget that it is winter, and that usually does create disruptions. Oil not moving, and they made this huge drawdown in inventories and that. So it's interesting. This is where that bottleneck issue that I talked about could start to have an impact. But I think what you're seeing in some of what they're talking about from the reduction is they're looking at home sales and that. Things have been overheated for a little while, calming down a little bit. It's not a bad thing. The slight increase in rates, though, certainly had an impact for home sales and that is always something to keep an eye on, because that is what triggered the last financial crisis, was Bernanke's tarification. That's a new word. But he was terrified of inflation because Greenspan had contained it so long, and his hyper acceleration of raising rates so quickly created the Great Recession. I mean, there's just no other way around it. You can talk about asset bubbles all you want, but didn't have to do that to rates. It could have been in a more modified, and there would have been a much more controlled and contained situation. Didn't happen that way. Did they learn anything from it? No. And gold, still holding pretty even at this particular point. You would think, though, that if the economy has stopped, as they were saying, you should see a massive sell-off in gold. So the news doesn't match what the market's doing. That's always something to be cognizant of. Oh, that's my phone. Sorry for that little delay. You didn't notice it, but little mini emergencies with Isabella off to her special camp thing that they were doing because we have winter conditions. Go figure, in winter, having winter conditions. So, but the snow is falling in Italy, but here the market is doing the falling. And in this particular case, we ended up with the nice orange above 13.5. We'd already had the breakdown of DOC from earlier, right back here where we were under red, broke above it right up here in this sort of malaise period. But you had under DOC in this particular situation with the, not under DOC, but under the cyan with the steel, which meant you were almost at the potential for a reset, but it didn't happen. And that's what kind of held things kind of flat right at the 50%. So it was pretty stable, but then it began to break down further. And once you had this fading here of midterm and long-term buyers from that short-term chart, it just cascaded all the way back down to the zero. So but once we were at the zero, we had an almost decent reset, but it immediately faded like instantly, and that was because, again, if we'd seen the steel move above the 13.5, you could have called for a reset there, but it didn't. That didn't happen until right over here on this corresponding one, which was a little bit more what I would say an accurate. Click too many times right there. Right here, and you can see it. There's the difference between the steel not moving above it, and then it does. That gives you the indication. Of course, immediately broke back down below after it did that, but you still ended up with a couple zone move in this particular case, because you were down at the lows, and then it broke up here to the 38. Couldn't hold that either because it immediately did the little spider effect, and then you had another little reset that was a little bit better again, but you didn't get any steel resets, so none of these were survivable moves, so to speak, which is always an important one. Now, this is the closest we had to a steel reset at this particular, within the sell configuration on this DOC spread at 50%, so the expectation was to the zero at that particular point, but quickly the steel moved back up again, and even in this muck right here and the other returns, nothing. What was interesting about this, and this goes in with what we talk about the Fibonacci, which you're going to be Fib level retrace, I call it. It's not even a Fibonacci because it really doesn't match that. I'm going to change it to the Morganacci. But you had the flat low and falling highs, and that pulls price to the upper zone, at least usually to the 50% at that particular point. Then you would look for a sell signal, which would be your steel coming right below cyan, which happened right here. And that was your trigger to say, okay, we've had enough. And then it was confirmed with a full DOC spread by the time it was at 50%. And that's where this combination becomes so important. You know, we can actually take a look at this again, because even on a daily, here's your Bitcoin. Everyone loves Bitcoin. Right here, this down arrow corresponds to the daily being above with the steel, and then boom, crosses below. Right there, what was that close? 10,800. And we did below 8,000 just a little bit earlier, got down to 76. So all the people who thought that, this was an easy buy, we were talking about shorts back up there at 18,000 range. We can see now that we finally on a daily, it took a long while before we actually had the aggregate run that we were able to see clearly enough for it. Let me move this chart so it's back. And then if we turn to just the 30-minute chart, it becomes a little bit easier to see that. We kind of hovered for a while, and then we went into that full DOC spread right here, back up at that 50% move, and it's just cascaded lower. You had a couple of situations where we were in the potential of a buy, but the shakeout was really pretty ugly, and no closes here above the 23% at all. We just got one right back over here, and yeah, corresponded to a decent buy setup in there. I wouldn't be taking that in a continuing downtrend. You really need to see some proof that it's going to survive, and that you're going to have, but immediately, look at that, it came crossed over steel. We got a little bit of a spider right there. I would have thought that that was going to begin move back down, but you had quite a move of buying interest right there. Still doesn't look like this is likely to hold, but this is all positive extremed, all of it. So, in fact, we can go all the way back to the first positive extreme was right there, and certainly off the big giant candle. So, it's always those people who say buy every dip, and you know, what a great return. It's like, yes, but you know, even at that level that it's at now is like these thousands of % return from where it was a year ago. So it's something you have to have the right indicators to do, and that's a whole different story. As always, though, trade well. I will be on the Skype chat now more because I finally got the little ones squared away. Spring break coming up in the following week, so all sorts of excitements. As always, just keep at it and stay focused on the readings. Quit listening to the news. It's worth knowing what's going on in the world, but you can't let it impact how the trade goes, because a lot of times it is counter to what actually is going to happen in the market. So keep that in mind. Trade well.